Welcome to the STR Data Lab.
Hello and welcome to another episode of the STR Data Lab. I'm Jamie Lane, Chief Economist of AirDNA, and I'm joined here today with our guest, Erwan Le Roy, founder and CEO of Cashflow Street. Erwan, thanks for joining.
Hi, Jimmy. Great to be here.
So, reading through your history and sort of diving into what you've sort of done over your career, maybe you could just help our listeners just understand your sort of background and what led you to found Cashflow Street, and then what is it?
Yeah. So my background is in tech. Graduated as an engineer, came to the Silicon Valley 23 years ago and had a regular tech job as an engineer. And at the end of the year, I would have a little bit of savings or bonus that I would save until I could buy some real estate. My first property was my primary property in the East Bay. And then I was thinking about, hey, how can I generate some passive income? So I can have, of course, my day job where I trade time for money, but I can also have a side passive income. So I can build progressively this cash machine so that I can at some point have so-called this financial freedom. So I started with one property based on a friend suggestion in Paris, because originally I'm from France, so it made sense to buy from Paris. So I jumped right in, and that was 11 years ago. And I quickly realized that, well, maybe I made a mistake on my very first one because there are some regulations in Paris. So that was not the greatest investment, and I switched it to a 30 nights minimum instead of short-term rental. And that was one of the greatest lessons moving forward to better identify where I should be buying. And as I continue the tech world, I bought like two, three more properties up to the point where I didn't have to be in the tech world and really dedicate so much time in the tech environment. My last job was at Amazon. I worked for 4 years, and then at some point I said, well, now I need to transition to full-time on my vacation rentals. So I did what we call burn the ship and take the island. It's always a scary time when you do that. And but I felt confident with the cash flow they were generating, especially during COVID, because they were profitable during COVID time. And that was when I realized if it's profitable during COVID time, then I got something that gives me the security to switch my job. And I decided to found Cashflow Street, where I can help others to do the same and build this passive income and have more time, more freedom, have more choices based on their vacation rentals cash flow.
Oh, that's great. So, and started in Paris, thinking back, and this is probably like 10 years ago, I remember a headline about Paris where it was like the first time that the population in the city of Paris was starting to decline, and they were and attributing it to the rise of short-term rentals and sort of stealing primary residents away from Parisians. Do you think there's any sort of trend to that, or was that just media hype?
Media hypes. You can see that the media are in the business to get your attention. You hear a lot about Airbnb. Maybe you notice you don't hear as much about Booking.com or
Yeah.
HomeAway, and they're pretty much in the same business. And that is something that they don't want to acknowledge in the media, but they would focus on Airbnb primarily. So it's easy to find a correlation between two things and say, because of this, there is that. Maybe they could have said that, well, there is, I don't know, a higher death, a higher mortality among the cows in the south of France. Therefore, the fact that Parisian leaves Paris because of the cows in south of France. You could find like easy correlation that really shortcut by the media. Now, should it be regulated? The answer is yes, but I don't think that's what caused the Parisian necessarily to exit some of Paris. They also want a better quality of life outside of the city. And there's a lot of other reasons where that would happen.
Yeah. So give us a level set. What's your portfolio at? Where are they located now throughout the world?
Yeah, so I have 35 properties now. They're on 6 different markets in Maui, in Napa Valley, California, in Miami, In the US, Virgin Islands, which is my latest acquisition in Paris, although this is now midterm rental with 30 nights minimum, and in the south of France. So 6 different locations, which tries me to have some operations and an entire team to manage them on my behalf.
So if I didn't know any better and you were just telling me those locations, I would think you're just like some eccentric billionaire with homes in Miami and San Francisco and Hawaii and Paris and the south of France. But maybe what sort of drove your decision in investing in those markets, and what is the type of sort of path you sort of teach your students on how to select markets?
Mhm. Yeah, so I could speak for like 2 hours on this, but version. So basically, when I started, I didn't know where to invest, except like, well, I come from France, I stopped by Paris, therefore I should buy in Paris. That was pretty much the decision. But then I had a baseline. I identified, okay, I got in trouble with the regulation, but also from a cash flow standpoint, I can see the cash flow I get based on some other metrics in like on AirDNA. I'm sure we're going to dive in more in this. And I wanted to raise the bar. Like I want to do better. So the next decision is really how can I buy in a place that does not have those regulations? Because for short-term rentals, and now I'm very strong advocate on making sure that people don't buy in a residential area where there are regulations. Very, very important. And people ask me often, hey, what is the city where I could buy that allows Airbnb? That's the wrong question. You got to ask a better question and have a better answer. The question you should be asking, and the question I ask myself on my next investment, and so your own question is which city has very strong regulation about Airbnb, but there are zonings within those cities that uniquely allow Airbnb, allow short-term rental. Like, for example, hospitality zoning, or condo hotels, resorts, or some commercial zonings that specifically allow Airbnb. And why this is so important is like pure economics. You want to have limited supply and, of course, a high demand. If everybody allows Airbnb, then sooner or later the market's going to be flooded, or there is no market, and that's why they allow Airbnb. That happens specifically in Cathedral City. Now, Coachella is the festival, they allowed Airbnb, everybody bought a home there, and then they put some regulations, and the market is actually not too good over there. So I decided to buy in places where there are strong regulations, like in Napa Valley. You cannot do Airbnb in Napa Valley in a single family home. They have like a police that was going to go after you. But you can in a resort. So I bought a condo in a resort. And I can sleep better at night as well because I know I'm not taking anybody's home. Like the residential places are for the locals, and I could buy it in a vacation rental spot. So that's what I did. And of course, I compared the revenue I can get with AirDNA for the place I was planning to buy versus where the location was, but also versus Paris. So I could raise the bar. That's something I learned at Amazon. It's one of our core value to always raise the bar. Always raise the bar. So I had a baseline. How can I do better? And then I bought like several in Napa Valley. They're like, okay, that's pretty good. It's a good cash flow, but how can I do better? I had a very well-established baseline in terms of revenue, in terms of occupancy rate. How can I do better than Napa Valley? Maybe I can. But I looked around and I looked in Hawaii at different islands, different potential, and I landed in Maui. And Maui was definitely and is still very well performing because it's an island. You got limitation in land, like limited supply, again, and of course, very strong regulations, except in specific resorts. And for Maui, it's like, well, maybe it's not possible to do better in terms of cash flow than Maui. But I searched and I literally bought it from my laptop in San Francisco. I did not even visit it in the US Virgin Island. And that's a commercial property that also has the right zoning and also very limited supply. So that's how I always try to raise the bar. But it always starts with where are the tight regulations, but a zoning that allows me to do vacation rental. That's really the very first thing I look at.
That's great. And a big sort of piece of some updated tech that we've added into the AirDNA platform is actually allowing you to see if properties are zoned for short-term rentals or not. So as you're sort of evaluating properties, like making sure you're sort of focusing in on those that are zoned in areas for short-term rentals, in those commercial zones, in those sort of pockets that allow it. So at north of 30 properties, and it sounds like you're typically like pretty high ADR markets, and ADRs, average daily rates. So in areas where people are typically willing and able to pay a high rate for their vacations, like how do you think about the sort of question of sort of quality versus quantity and being able to scale your business, sort of bring in cash flow, and whether I'm sure you have the choice between $2 million condo in Napa or $1 million property in Napa or 5 homes in Indianapolis. So, like, how do you think about that question?
Yeah, so I'm going to give you the sweet spot. And this is the sweet spot to generate and maximize the return on investment and have the best properties in terms of ROI and cash flow. Because I don't think about it at the core of, in terms of ADR. Of course, ADR is one of the ingredients, no doubt about it. But I look at it in terms of which property is going to give me the highest yield and the highest cash flow. So in terms of cash flow, we can talk about this later, but it's more of an operational question. Like, how do I maximize the profitability? Like every dollar I receive, on average, I keep 42 cents. So 42%. And to achieve that, I don't hire a property management company, but I have my own property management company. And I teach people to do the same. It's not rocket science to manage a property and have the right backup. But I focus on the highest revenue one, but the highest yield. So the minimum yield I would focus is 30%. Yield being defined as the gross income. Like if I go on the AirDNA side, the tool at the time was called Rentalizer. I mean, there's different ways to access it. See what is the estimated revenue I can get for any property in the world. Maybe not in North Korea, but most addresses, I can see almost instantly that's the revenue I can get. And divide it by the list price, whatever is on the MLS. And the answer, whether I want to pursue that deal or not, is very simple. Is it above 30% or not? And if it's above, that means I'm creating a pile of leads that have interest. And that's where I would focus. And the one I would focus on, the sweet spot, is not the 5-star. It's not the 4-star. It's actually the 3-star type of apartment. I've yet to see an oceanfront property that generates 30% yield. There is one, please send it to me. But we look at it every month. We scan like over 750,000 MLS listings every month, and I've yet to see an oceanfront. The sweet spot in terms of ROI is a 3-star. Think about it like maybe 1 block, 2 blocks away from the beach, like a great location, great amenities, but very close to the beach, but not with the view. For the simple reason that the oceanfront property will be extremely expensive, and guests will not pay that much to generate a 30% plus yield. So that's kind of the sweet spot. I would say between 500K to 1 million for somebody who starts. It's a great sweet spot for a condo or 2-bedroom. Focus on small and many. Like think small units, not 4-bedroom, 4 bath, or 5-bedroom, 5 bath. I reviewed with one of my student yesterday. Like she came to me. It's like, hey, this is my portfolio. It's not making a 30% yield. And look at it. Yeah, it's a 5-bedroom, 5 bath. Very hard to maximize the occupancy on this one. So think small and many, like multi-family, or a 2-bedroom, 2 bath that you can divide in two as a lock-off unit and a 1-bedroom. That's how you maximize occupancy and you maximize the yield. And that's really what I focus on now. But again, starting with the right zoning. Where can I do short-term rentals and then generate this yield?
So what type of markets are you finding those type of yields today?
Depends. It's very interesting because every month, so we use, of course, AirDNA to zoom in some of the right zip codes and cities, but also have my own proprietary AI tool where we actually leverage a lot of listings to identify those and making sure that we just filter on the 30% plus listings. And it's very interesting that many of them are just hiding in plain sight. Like some people think, well, it must be an off-market deal, or it might be Maybe something that the cousins or the uncle told them about and it's not available or it got sold in a minute. No, some of them, like they are on the MLS sites, like waiting for like 6 months, and they don't necessarily look good. Like people think, well, maybe they are shiny objects. No, they're not shiny objects, but you have to use your imagination. Of course, put the emotion aside. And it's something Warren Buffett talks a lot about stock buying, to not have your emotion skew your decision. Make sure that you're data driven. And I mean, that's why I'm not trying to say something where you may be biased, but I love AirDNA for that because I have access to data to put my emotions aside. And math is the enemy of bullshit. We don't want to have like our mind crowded with like, oh, but look, it's an ocean view. It's the price dropped by 100K. Must be a good investment, right? Well, no, put it in the tracker and we make sure it's a good investment or not. So I have an entire team that look at various sources to find those deals and generate every month a list of properties that make a 30% yield minimum. And those are the ones that join my mastermind that they have access to so that they don't make a bad decision. As you know, it's an illiquid asset. So whatever they buy, they need to make sure they make the right decision. Otherwise, it's very costly. And when you buy a 30% plus yield property versus a 10% plus yield property, well, we can do the math on a lot of different price point, but over the lifetime of the property, we're talking of hundreds and hundreds of thousands of dollars in difference in your pocket. So you make money when you buy, always insist, and make sure you buy right. Make sure you get the right data from your DNA. Make sure you have the right list to focus on. And that's really how I serve my clients, to provide them with the right list and the right properties to put offers on.
Yeah. So, and it's something that and I look at a lot, and the results that are coming out of our rental calculators and the other calculators out there. And in the end, it's a selection of comps. And I feel like I would never make or never want to make a decision just on a computer's algorithm of what that comps is. That selection of what properties might be comparable to mine, of like knowing like that every single one that going in, if this subject property I'm looking at buying is 3 blocks off the beach, I don't want to be pulling a comp that's either on the beach or 1 block off. Of really diving into those locations, really diving into the amenities. So what is the process that you're teaching your students of and going in and sort of evaluating the comps, of understanding how they're going to perform relative to the comps? Like, are you assuming that all your students are going to essentially perform as well or better, or and of what the existing operators? Because as you know, the operations make a huge difference in terms of what a property can earn. So how do you think about the numbers when evaluating a deal?
Yeah. So it's really a three-step approach. I mean, one, we have a simple calculator where they can, like in 10 seconds, use any property and yes or no, they can move forward with it. But the second is a really deep dive calculator that I provide them to make sure that they clearly identify the profitability of a specific property with like very close comparable properties. Like, as you said, if one is on the beach, well, it's not fair to add it as a comp if they make more money. Or maybe they have a swimming pool and you don't. So making sure that you have this second calculator with like a much more narrowed, more granularity by months, exact comps, but also looking at alternatives. I think it's very important in the vacation rental business that you look at what if scenarios. What if I cannot do short-term rental tomorrow because there is or next year because there is COVID 2025? I mean, who knows? We all got surprised. So if you have to switch to a long-term rental or midterm rental, are you still profitable? So we look at what if scenarios, we look at risk mitigation to make sure that this is a good investment and you always make money. I remember Warren Buffett saying, rule number one in investing, don't lose money. Rule number two, remember rule number one. So it's very important that when we make an offer that we don't just think, oh, this is a shiny object for an Airbnb, but what if you have to do midterm rental because something happened? Nobody predicted COVID-19. So we have to think that way as well. So that was the two first thing, the quick calculator, a more deep dive calculator. But the third thing, and it's so important, is the marketing slash operations. And that's why the mastermind I cover buying and the marketing slash operations, the two things, because like to run, you need to have your two legs well in shape. Otherwise, you're not going to be doing well for Airbnb. If you buy at the right location and then you take photos with your iPhone, they're dark, the bed is not made, and you put them on Airbnb, you're not going to get any bookings. And I mean, this is an exciting time we're at with AI. Yesterday, I had my mastermind. We just talked about some of the latest AI tools we can use to really differentiate yourself from your competitors. We had a so-called 2 millimeter shift from your competitors that make a massive difference so that you have the attention of potential guests on your listing. This is how you win the game. When potential guests look at Airbnb or Booking.com, you have less than 7 seconds to influence them. So make sure the benefits are clear, the right photos, the right title, the right benefits. There's a lot that's come at play there. We do a lot of A/B testing, especially with the volume of properties, to see what works, what doesn't. And that's what I pass to my students, my clients, so that they can win the game as well. And I'm very excited when I can see their revenue going up and up because they're doing the right thing. So we focus on those two things because I know deep down, I've seen it myself, my properties, you're not successful if you just buy right and you don't market right or do the right operations. The two have to go hand in hand.
Yeah, and so you mentioned a couple things about operations. What do you see as the thing that people miss most when setting up their operations?
Wow. So I can ask them 3 questions. I know if they leave a lot of money on the table or not. The first question, which platform are you listed on? They say, well, I mean, someone tell me it's Airbnb. Oh gosh. And I'm super host on Airbnb. And I'm guest favorite on Airbnb. Great. What else? That's it. Well, you gotta be on booking.com and VRBO. You cannot miss those. And you also need to have your direct booking website so that you can pass your guests from Airbnb later on to repeat guests on your direct booking website. So that's the number one question. Which channel are you on? Because Jim Abraham, is a great consultant, maybe the greatest consultant ever in business, said a channel is an asset. A channel is an asset. If you miss channels, you're missing assets. You gotta have booking.com and VRBO and direct booking websites as well. The second question I asked them, what pricing tool are you using? And oh my gosh, a lot of people are like, okay, it's going to be $200 for the entire year, or they have 2 seasons. I'm like, you're missing so much. I feel bad for them. You spend your hard-earned money buying this property, and you don't have a pricing tool. I mean, you can use any pricing tool you want, but I know AirDNA has one. Beyond pricing, price lab. I mean, there are multiple pricing tools, but don't do it yourself, please. And don't use the Airbnb one, especially you need to have multiple channels. So use one that you can centralize the pricing and dispatch it to all of your channels. That is super important. And the beautiful thing about many of the pricing tools is that you can have also a dynamic minimum night that is set. So if somebody books in 6 months from now, it's a different minimum night than if it's tomorrow. And that changes dynamically. That's how you maximize revenue. So super important. And the third question I ask them is, do you have a property management software or not? Because if you do, you can serve your guests better. You can communicate automatically with guests. You can set up some custom fee, custom taxes, and so on. That's also going to drive your revenue up. Because at the end of the day, it's about the guest experience. That's why we're doing this. It's to serve the guest before anything. So those are the 3 questions. At first, I would ask if they leave a lot of money on the table or not. And there is a lot more on the marketing, how to use AI, how to run operations to maximize the profitability. But I would ask any of those the 3 questions.
Yep, the basics: channel, revenue management, PMS.
Yes.
What's your tech stack? So, as you know, like there's so many ways to get into short-term rentals. And there's now co-hosting, property management, ownership, arbitrage, knowing that buying and operating is not financially feasible for everyone from the beginning. And what are the other and sort of entrees into the short-term rental industry that you suggest to your students?
So first, it depends on what you value the most as a student. If certainty and not spending any time is what you value the most, you should probably not be doing short-term rental yourself, but outsource it to another property management company or buy some kind of timeshare where it's completely hands-off. You don't even own the place. But this has a cost. And I won't go into all the details, but generally speaking, when you buy real estate, there are three things that are most important. There are three benefits that you want to have as an owner to build wealth long term. First one is cash flow. That's the most difficult one, to make sure you generate maximum cash. Second one is appreciation. And that one is easy. You buy, you sit on it, you do nothing, it goes up. That's very simple. And the third one is depreciation. And to get those three, sorry to say that you have to really drive your own operations to maximize the cash flow and get depreciation and appreciation. If you go with a property management a property management company, you're gonna think you have some peace of mind, but it's gonna be some additional cost. And depending on the property management company, they're gonna charge a different percentage of the gross income. I'm not a fan of property management company. I may not make good friends with them, but maybe I should be a property management company because they make way more money than they should, in my opinion. And be careful about the actual fee. They may tell you they only charge 10%. I won't put names there, but there are some companies that say only 10%. I talk to them. Well, there's the cleaning fee on top of it, or the pricing is actually very different. They don't manage it with legitimate and great pricing tool. The claims of the guest, the extra guest fee, and so on. So there's a lot of things you have to look into if it's a property management company. But I think it is in the best interest of the owner. For whoever listens to this podcast, it is not hard to have your own management team that take care of your Airbnb. You can either talk to a property management company, they're going to charge you a lot, or you talk to a VA, that virtual assistant that has the right team and the right setup. And that's what I teach in the mastermind. But it's just a different point of contact. You want to talk to a property management company or a virtual assistant. If you talk to a property management company, your cost is going to be extremely, extremely high. So I would say don't do it. But it's a personal choice. At the end of the day, the market's fragmented. Some people want complete hands-off, but no, there is a huge cost to it. And you may even not have much profit left doing with property management.
So you talked about your ideal tech stack, or at least the basics of a tech stack. Now, what's sort of the basics of your like local market team that you're putting in place instead of a property management company? Is it just a cleaner? Is it in maintenance, handyman? You mentioned VAs. Like what does that sort of personnel look like to get going, and whether it's one property or if you're scaling up to many?
So think about vacation rental as a plane. You cannot have any single point of failure. Otherwise, you would see plane crashes almost everywhere. You've got to have always a backup. And in the hospitality market, it's not as severe as a plane crash, but you can have a very bad situation with any guest issue if you have just one member doing one type of service. So every place where I have my properties, two cleaners, minimum two cleaners, two handymen, meaning different teams, like they're not even the same company, two different plumbers, even more. Like in Maui, I have a list, two AC companies, two electricians. So those are some of the core ones. The cleaners and handyman are the two most important. One for the on-site team, and make sure you have duplicate. Also, make sure that you evaluate your suppliers. Evaluate our suppliers about the quality of the work, and some basics. Do they generate an invoice? Like, I don't want somebody to tell me, campaign. No. Do they generate an invoice? Do they do quality work? Did the price change during the work? Like sometimes some like to change the price. Did they show up when they say they show up? So we have a table where we simply rank them: green, yellow, or red. And over time, you're going to see who emerges as green. So every site needs to have this dual team for handyman cleaners, I see. And the virtual assistant is basically talking to and scheduling with this team. And depending on how many units you have, the virtual assistant can do this operation and the guest communication. And also have a duplicates for the virtual assistant. There's a primary and an on-call person. So always have duplicates. And that's going to cost you much less than a property management company. And they're going to be really working for you on your behalf. And you can really keep them accountable.
That's great. So, and I'm sure you've sort of seen and heard and maybe even felt the sort of changes in the business over the past 4 to 5 years. And you've been in since 2012. You said your first property was in Paris,
Yeah.
2013. Funny enough, that's when I started my first short-term rental, renting out an extra bedroom in my house back years ago. But like during COVID, we saw a pretty significant impact, an increase in demand in sort of rural areas. We saw a pretty significant pullback in maybe a lot of the type of cities that you're located in, Hawaii, Miami, San Francisco, as we sort of went through the COVID eras. And now we've started to see a pretty strong recovery in those urban areas as global travel starts to come back. Have you seen your portfolio? Have you seen sort of your students reacting to these sort of massive changes in and global travel demand and how the short-term rental industry has been responding?
Yeah, I mean, it's a really interesting question because yes, there's always some fluctuation in each of the local market, but we continuously test. Like we use the I call it CONI, continuous and never-ending improvement for how we position the listing. So meaning whatever the demand is, like there's some fluctuation, no doubt, in the short-term rental for the urban area, and even where we always try to differentiate ourselves more and more and more. So it's about the attractivity of the pool of every single listing, no matter what the fluctuations are for a particular market. So we see year after year, like since the end of COVID, the market going up and up and up in terms of revenue. And it's also because each of my client and myself, we are improving our listings, even the pricing strategy. Like every month, I may think after 11 years, I got it and it's good to go. No, every month I do A/B testing. I would do something different in maybe some often nights. Maybe it's the pricing of the weekend, and maybe it's the based on occupancy rate. I can change the pricing strategy. So that means I can have a bad month, but I'm not having a bad year because I always test, always try to beat the previous one. So for the locations that we mentioned, the demand definitely keeps going up for this particular listing. The profitability also is going up because we become more and more efficient in terms of our operations. So, and that way, we see an upward trend since 2021. During COVID, there was definitely a slowdown, but it was still profitable, even though we had to shift to midterm. There's no short term. Like in Maui, they say we shut down the island of Maui. No tourists can come. So great. Often like my Airbnb is a great, but well, I can shift to midterm. And as a side note, people need to realize that because so many hosts or potential investors who listen are not aware of that. Can they change silver as an asset class into gold? They cannot. But short-term rental is a very unique asset class where you can change this asset class instantly into a midterm or long-term, and back to midterm, back to short-term. So when you buy short-term in the right zoning, you have the flexibility to change asset class. So people think, well, it's too risky. It's like an objection I hear sometimes. It's too risky to buy short-term. Why? Well, at any time you have a COVID 2027, you can shift to midterm or long-term and back. But when you buy long-term, people think it's more secure, it's safer. Maybe not, because you're stuck with long-term. You cannot do short-term, most likely, because of the HOA, because of the zoning. So you're stuck in that asset class. In real estate, short-term rental has a very unique ability to shift instantly the asset class to midterm or long-term and back to short-term. People really need to remember that. So make sure when you buy, it has a kitchen or kitchenette in it, so you can also do midterm and long-term eventually.
Yeah, I think people would be surprised what percent of Airbnb listings are actually like midterm rentals, like a minimum stay greater than a month. I think I was looking at the data. It was like in urban areas in the US, it's as much as 25% of Airbnb listings have a minimum stay of greater than 28 days. So it's significant. Airbnb's called out that and 22%, I think, in their last earnings call of nights booked were for reservations of 28 days or longer. And that the fastest growing, I think, now is for 3 months or longer. So you can change that business model and not even have to leave Airbnb because the demand's still coming through still coming through Booking.com, maybe less so through Vrbo, given that the type of traveler that's booking through there. But it's definitely the OTAs, the platforms are evolving in terms of the type of demand that they are attracting. And I think COVID really helped that too.
Yeah, it's very interesting. I mean, Airbnb does such a great job with the user interface. Like, if you want to book something for 3 months, you ask yourself, where am I going to look? Well, I mean, Airbnb is pretty well designed site. You can put the dates. It's from like April 20th to June 20th, and you get all your listings. I mean, what other sites were that good? I mean, you can go on Zillow or this other website. You can do your bookings right there. You can book your place all the way on Airbnb and compare. I think it's also one reason this is so many midterm and long term is their website is so well designed that the users go there to find the right supply.
Yeah. And maybe on that note, and looking ahead, and where do you see the sort of most significant opportunities and maybe changes happening in the short-term rental industry reflect maybe the type of markets, the regulatory environment and how it's changing, like midterm versus short term? Like, how are you thinking about sort of strategy coming up?
So it's interesting because every month we generate a list of where are the best investments. Like, and we start with the 30% yield. And of course, then we deep dive on the right zoning. And every month is different. It is very, very hard to predict month after month. Like, there would be some central states in the US that generate that yield, where personally I would not necessarily go on vacation, but that's really the numbers picked by themselves. But I would definitely look at what type of regulations they have there. I mean, generally speaking, maybe it's I'm not going to please everybody, but I think regulations and taxes are good, and I hope it's going to be more integrated into Airbnb, so it's easier. So you don't have this hide and seek game going on in a lot of cities. Have the host slash the guest pay for the right tourism taxes, and a lot of cities now starts to integrate it. Make sure it's also integrated on Booking.com, VRBO, and the direct booking sites, which is another challenge to integrate it. But make sure that this is well integrated so it controls the supply demand, where the residential properties can be like for midterm and long term, and the vacation rental one can be for vacation rental, and the taxes pay for the infrastructures of the locals, and the residents can win. So I think moving forward, we're going to see the regulations that are more implemented, the tax is going to be more integrated to the platforms, and that is a good thing. I think it's going to rise the level of the image of Airbnb, so that Airbnb now starts more helping the local infrastructures. I mean, they give a lot of money. If you look at Paris, which, by the way, Paris is not too happy about Airbnb, but they receive a lot of money from Airbnb on the taxes. It's kind of interesting that for the upcoming Olympic Games, Airbnb is an official sponsor for the Olympic Games in Paris. And that makes me smile because they were not too friendly not too long ago. But they also welcome the tax that's coming up. So I hope this comes into other cities, and there is better regulations. And I think that's going to be a trend that we see. And then there is a trend that is more personal that I hope is going to happen more, and in Airbnb, Booking.com, and VRBO. And that's going to be also the gift for your audience to implement on their own, is giving back. And when I started to look at my listings and start to give back, like the fourth image of my listings, actually I have an image on Airbnb that says, if you come to my listing, I give back to these charities. Like for cancer, personally, it's like cancer research, smoking cessation programs, the Tony Robbins Foundation. So some programs that just help, things that are important to me. And the guests have a choice. They can go to an Airbnb where they don't give back, or they can go to an Airbnb where they give back. Well, guess which one they choose for the same price? They go to the one where you give back. So I hope we're going to see this trend more, where those platforms put on the forefront giving back, not just in taxis, as I talk about, but charities that is well integrated into the channels. Airbnb has airbnb.org, but if you look the majority of these things, you don't see any give back. And that's because I put it as an image and in the text that it's on my listing. Otherwise, it's not easily integrated to Airbnb. So I think people should do that. It's going to change the image of Airbnb. It's going to be good for the guest, good for the host, good for the charity. And I think personally, it's the right thing to do.
Oh, that's great. So we're just about at time. So maybe reflecting on and what's next for you, what's next for Cashflow Street, and what are you guys looking to do next and with your group?
So we're always looking at investing in the most profitable locations and properties. People always have a choice to buy in their dream bucket, like this oceanfront property that does not make money or much, or their growth bucket. Cashflow Street, it's actually the name, focuses on the growth bucket. We focus on cash flow, but we also give back. I just mentioned, very important to give back. So next step is going to open to have very few additional clients for the mastermind, for people who wants to identify where to invest, how to identify the most profitable properties. And AirDNA is a very, very important tool. We wouldn't be doing what we're doing without AirDNA data. Maybe it's also another podcast about what data we look at on AirDNA to make it happen. But there's a lot of data on AirDNA. We have to focus on the right one to make the right decision. And so what's next is about finding the right locations, not just in the US, but we look at other places like in Canada, in the Bahamas, we're going to Europe as well, where we provide the list. So it's important, not just teaching people how to fish, but we give them the fishes and we assist them with the twice a month call on how to market, how to do the operations so they can maximize their profitability. So they can always send me an email. I read every single email. It's at erwan@cashflowsuite.com if they're interested. And that's really what we're doing next. And now is an interesting time, not just these coming months, but the next 2 years or so with motivated seller. People can see it in the news, especially on the commercial side, where they can actually find some great properties. And commercial is not necessarily more difficult than a residential when it comes to buying. It may be unfair, but maybe also easier to buy a larger property than a small property, maybe less cash. So that's what we teach as well. There's a great book I recommend people to read on that topic. It's called 10x is easier than 2x. 10x is easier than 2x. Read it. You better understand what I mean, but it's also why we teach people maybe buy something bigger. It's going to be easier than something small and easier to finance as well. So more opportunities coming up, and that's why we want to align people with those opportunities and making sure they make the right decision. And to finish, there's a great quote from Warren Buffett. He always advised that assume that in your lifetime, you have a punch card with like 20 punches for investments. There are only 20 punches in your entire lifetime. You cannot invest in more than 20 things from the time you're born to the time you leave this planet. And that means 20 punches, not a lot of decisions you can make to invest. But that's how people need to think. And we want to make sure that we guide them to the right punches so they don't make mistake on an illiquid asset. And that's what we're here for. And this is a good time. We are in an economic winter, and that's when the fortunes are made, when you can really buy great asset at a great price.
That's great. Well, Erwan, thank you so much for joining. You already told people how to contact with you at Cashflow Street again. Thank you so much for joining.
Thank you. Thanks to me.